Hey everybody, Abdullah Shamari with you again, here to discuss the market downturn. We saw that most of the indexes today went down by 5%. In general, it's been pretty unpredictable what the market's doing this past year with COVID-19, everything that's been happening. The markets have been going up and down. In March, we saw some significant downturn from up to 30-40% downturn, and then we saw a quick V upswing in the markets. So today I'm going to be going over a few principles that I go by when it comes to instability in the market and how to invest your money. First and foremost, gotta always invest money they're willing to keep in the market for at least 3 years. It's tough to be able to predict what the market's going to do in the short term. However, in the long term, generally, as Warren Buffett says, America continues to grow. If you do want to invest money that you'll be needing, you have to be conservative. Wouldn't invest any more than 50% of the cash that you have. And this is assuming that you do have an emergency fund as well. When investing in the market, make sure you do so in increments. You see the market's coming down, don't try to guess when the trough is going to be. You have to invest in increments because timing the market is always a losing game. Nobody knows when it's going to hit the bottom and nobody knows when it's going to hit the top. So always want to invest in increments. A great general principle to go by is 50% of your available cash when the market decreases by 10%, then put an additional 50% of what's remaining when it decreases the next 10%, and then finally put the remaining amount when it decreases the last 10%. Generally, we've seen the market hasn't decreased by more than 30%, except for a few recessions over the past 100 years, and you can count those recessions on your hand. Third principle I go by is to identify great companies at reasonable prices for long-term investments. Long-term investments create the greatest value. I've heard so many people say, I bought this share and I sold it at X amount because I thought I was getting a great deal. And then if they had kept it 5 to 10 years, they would have made hundreds of thousands and in some cases millions of dollars. Price to book ratio, which we discussed in another video, is a great guide to identify companies that are trading below their values. A great example right now is Berkshire Hathaway. It's trading below its book value or very close to its book value. So it's a great bargain, even though the market in general has been on the downswing. Finally, when you invest in great companies in the long term, you're always going to gain. Think about Microsoft, Apple, Google, Amazon, Shopify. All of these companies over the long term, they're going to do really well. They continue to grow. Their business models are sustainable and continue to thrive with the change in the economy as well as the change in the marketplace. So these are the 4 things and a few of the points that I wanted to mention as we're going into this downturn in the market. So keep those in mind. Tune in for upcoming videos. Take care. Bye.